Welcome to the Coin Bureau Weekly News Roundup. Here are the top stories in crypto this week. Trump's crypto promise. US presidential candidate Donald Trump makes history with his pro-crypto speech at the Bitcoin conference in Nashville. Everything you need to know. Mt. Gox update. Creditors of the bankrupt crypto exchange begin receiving billions in BTC payments, leading to fears of a large sell-off. How could this affect the crypto market? Ethereum ETF outflows. The spot Ethereum ETFs experience over $1 billion of outflows in their first week of trading. Why this doesn't tell the full story. Stock market slides. Large caps start to crash as investors question the AI narrative and rotate into small caps. How this could be bullish for altcoins. And a closer look at last week's top performing cryptos and where they could be headed next. All this and more in just a moment. Over the weekend, Donald Trump made his historic appearance at the Bitcoin conference in Nashville. And yes, it was historic. It marked the first time that a US presidential candidate has spoken at a crypto conference, besides RFK Jr., of course. Now, it looks like Kamala Harris was also going to speak, but it didn't happen. In any case, Trump basically said everything everyone was expecting. He promised to end the SEC's war on crypto by firing Gary Gensler on his first day, if elected. He promised to free Silk Road operator Ross Ulbricht, and he promised to support the Bitcoin mining industry with an increased supply of energy. Trump also promised to create a strategic Bitcoin reserve, but it seems that many misinterpreted what he meant by this. For context, most countries will hold other assets as reserves that they can use to support their currencies. The US, though, doesn't have many reserves, as the USD is the world's reserve currency. To put things into perspective, the US government holds around $770 billion of reserves, $550 billion of which was gold in 2021. For reference, countries will hold reserves equal to at least 15% of their GDP. With an annual GDP of over $25 trillion, the US only holds 3% of it in reserves. Now, logically, turning BTC into a reserve asset would involve adding the roughly 210,000 BTC the US government holds to its existing reserves, adding roughly $15 billion to the existing $770 billion. The logic is that this BTC could someday be sold to support the value of the US dollar and the overall US economy. However, it seems that the strategic Bitcoin reserve Trump talked about did not involve turning BTC into a reserve asset per se, but rather keeping the existing BTC it holds and effectively promising not to sell it. Then again, it's hard to say as Trump didn't really go into detail. He just kind of rambled, as he often does. This would explain why BTC's price action was mixed when Trump took to the stage. The markets were essentially trying to figure out exactly what he was promising and just how bullish it was for BTC. The verdict seems to have been that it was bullish, but nothing that investors weren't already pricing in. The result is that BTC continues to chop sideways at the time of shooting, but the chart suggests this could change. If you zoom out to the weekly and slap on the Bollinger Bands, you'll notice that BTC is back above the Bollinger Band moving average. This means the next week could be incredibly bullish. So, if you want to make the most of what could be a rally to new all-time highs, then maximize your profits using the Coin Bureau deals page. It's got trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on the best crypto exchanges. Link below, and while you're at it, smash that like button, subscribe to the channel, and ping that notification bell. Big things are coming, and trust me when I say that you don't want to miss them. Anyways, another reason why BTC's price action was mixed over the weekend could have been the ongoing concerns that Mt. Gox creditors would sell their BTC. To bring you up to speed, Mt. Gox was a crypto exchange that collapsed back in 2014. It owes its creditors roughly 120,000 BTC, worth roughly $8 billion. Naturally, there have been concerns about what would happen to BTC's price when Mt. Gox finally returned this 120k BTC to said creditors. That's just because BTC is up over 100x since 2014. This means that creditors are sitting on life-changing gains in many cases, and many of them would presumably want to sell. Well, Mt. Gox began returning BTC to claimants earlier this month. And the key word here, though, is claimants. Although there are an estimated 25,000 Mt. Gox creditors, most of their claims were filed through a handful of third parties, primarily cryptocurrency exchanges, the largest of which were Kraken and Bitstamp. You can think of these crypto exchanges as being the claimants. Their task is literally to claim the BTC from Mt. Gox and then distribute it to the creditors. While there had been reports that this would take up to 3 months, Kraken, Bitstamp, and others subsequently announced that they would do this sooner. Well, Kraken and Bitstamp both started actually returning Mt. Gox BTC to creditors last week. Kraken alone was transferred over 48,000 BTC, more than a third of the total amount to be returned to creditors. So far, though, it seems that there's been minimal selling, with reports that most creditors are hodling. This makes perfect sense when you remember that selling BTC at a 100x gain would result in a sizable tax bill. For some larger creditors, the capital gains tax could be close to 50%. In practical terms, that would translate to a total tax rate of almost 50%, as the principal investment was so small 10 years ago. For these larger creditors, it would make much more sense to use their BTC as collateral for loans. And, lo and behold, Cantor Fitzgerald, the financial firm that manages some of the reserves for Tether's USDT, announced at the Bitcoin conference over the weekend that it would be launching a Bitcoin lending business, just in time for those Mt. Gox creditors. Now, besides borrowing against their BTC stacks, another thing that large Mt. Gox creditors are likely to do is transfer this BTC from self-custody into the spot Bitcoin ETFs, assuming that is possible. This is because holding their BTC via the ETFs would give their assets additional security and regulation. Regardless, the key takeaway is that Mt. Gox creditors don't seem all that keen to sell their BTC. The caveat is that around 80,000 of this BTC has yet to be returned. This remainder, though, is expected to be returned by the end of October. Newsflash, that's more than 3 months from now. And even if all the remaining Mt. Gox creditors sell, which is very unlikely, then it would probably have a minimal effect on BTC's price, as the selling would likely be spread out over multiple weeks. As always, it seems that the news is what spooked the markets. The actual event has been a nothing burger. And we actually covered the whole Mt. Gox selling question in a recent video, and you can watch that by hitting the link in the top right corner. Now, it seems that all the news around Bitcoin overshadowed the launch of the spot Ethereum ETFs last week. This wasn't hard for BTC to do, considering that the spot Ethereum ETFs experienced over $1.5 billion of outflows. The thing is, though, that's not the full story. According to Farside Investors, the spot Ethereum ETFs only experienced around $340 million of net outflows. Obviously, that is still bearish for ETH, as it resulted in more sell pressure overall. But the thing is that it also means that the spot Ethereum ETFs experienced over $1.2 billion of inflows. And not only that, but these inflows have been gradually increasing, at least for the spot Ethereum ETFs from BlackRock and Fidelity. Meanwhile, all of the outflows came from Grayscale's spot Ethereum ETF, whose trust holders have likely been selling to capture the arbitrage from buying its trust shares at a discount. More about that in the description. I digress. The point is that this paints a surprisingly bullish picture for ETH that nobody has been paying attention to. It seems that the only thing ETH is missing to finally catch up to BTC is a catalyst that would cause some serious rotation, something which is now possible in size given that both cryptos have spot ETFs. If you're subscribed to our weekly newsletter, then you'll already know that the Fed's press conference this week could be one catalyst that takes ETH and altcoins higher. If you're not subscribed to our weekly newsletter, then be sure to do so using the link down below so you don't miss our next market forecast. So then, how high or low could ETH go? Well, zooming out to its weekly chart gives us the answer. ETH seems to have bounced from a key support level of 3.2k last week. If this bounce continues this week, ETH could rally as high as 4K in the short to medium term, a 20% gain. Zooming out even further reveals a potential bull flag pattern which could take ETH as high as 5.5K if it plays out. But, well, let's take things one step at a time. As a fun fact, looking too far forward on the charts is how you often get wrecked as a trader. If you trade what's in front of you, you may find you'll have more success. Now, besides the Fed's press conference, another catalyst that could take ETH higher would be the news that another asset manager is launching real-world assets, or RWAs, on Ethereum. For those unaware, BlackRock launched a tokenized US Treasury fund on Ethereum back in March called BIDL. And if you watched our most recent Ethereum update, you'll know that it looks like Ethereum is becoming a de facto RWA blockchain. This will probably be confirmed if Franklin Templeton follows through on its reported plans to launch its own tokenized RWA fund on Ethereum. And that would be very bullish for ETH. This is simply because it would give Ethereum a narrative that institutional investors can understand. It may not be the narrative that the Ethereum community wants, but it's the one that they're slowly getting. And it's going to be very interesting to see what the institutions do when they realize that Solana is Ethereum, but faster. Anyhow, whereas crypto has been pumping, stocks have been dumping. And this rare divergence seems to be due to a combination of concerns around the AI narrative and what could be the beginning of a rotation from large-cap stocks into small-cap stocks. And this could be a tailwind for altcoins. More on that in a second, though. Now, regarding the concerns around the AI narrative, it seems that investors are waking up to the fact that AI may not make as much money as they initially thought on the timeframes they initially had. More importantly, it may not compensate for the hundreds of billions of dollars that have been flowing into the industry. Make no mistake, the companies selling the hardware, like Nvidia, have been making very real revenue that will result in very real returns for investors. However, the same cannot be said for all the AI companies that investors have been hoping will yield equally mind-melting returns. Top of mind here is OpenAI, which is reportedly due to run out of money in a year. This is crazy considering that OpenAI has not only raised more than $10 billion, but is also reportedly bringing in $3.4 billion of revenue. It underscores just how much is being spent on development. If that wasn't crazy enough, OpenAI CEO Sam Altman once said that the company was making no real revenue, didn't have plans to make any real revenue, and hoped that its AI creations would find ways to make revenue for it. To be fair though, the last time he said this was apparently early last year, but still. Speaking of which, it seems that AI could be in the process of disrupting the existing big tech companies. This was put on full display when OpenAI recently announced its GPT-powered search engine. Not surprisingly, this announcement caused Google's stock to dip as it could threaten Google's dominance. In other words, existing tech companies are being increasingly threatened by AI innovations whose creators aren't sure how they're going to monetize. Heck, some companies like Meta are giving out their AI technology for free, and crypto projects are slowly but surely making better AI products as well. In the long term, this could result in deflation, which is something that the elites do not want. Whereas inflation means prices are going up, deflation means prices are going down. In such an environment, debts become gradually more expensive, and as we all know, the elites have a lot of unpayable debts. We know this because they're always pushing for inflation. If you watched our video about how BlackRock predicted the fiscal and monetary response to the pandemic, you'll know that it was in part designed to compensate for the fact that there hadn't been enough inflation prior to the pandemic. Seriously, check out that video. Now, in the shorter term, the dynamic between cutting-edge AI that can't be monetized and existing big tech companies is resulting in increasing levels of investor uncertainty. This is likely contributing to the apparent rotation from large-cap stocks into small-cap stocks, where things probably make more sense. The fact that small-cap stocks are correlated to altcoins means that a boom in small caps could echo in the crypto market. And this would be a welcome development given that, like small caps, altcoins have been experiencing a chronic shortage of capital rotation, with everyone focused on BTC, Sol, and memes. And on that note, it's about time we took a look at last week's top performing cryptos. So then, last week's top performers were Helium, Jupiter, Sats, PYTH Network, and Jasmycoin. Note that 3 of these 5 are in Solana's ecosystem, and we'll be doing a video on the top 5 Solana projects very soon, so stay tuned. Now, starting with Helium, HNT appears to have pumped in response to the news that other mobile carriers are trying out Helium's 5G network for mobile coverage. FYI, Helium has already partnered with T-Mobile for low-cost mobile coverage across the US. HNT appears to face significant resistance around the $6 level. If it can break above this level, $8 is the next level to watch. If it gets rejected, look out for $4 to the downside. Next up, we have Jupiter, whose JUP token appears to have pumped in response to a whole slew of milestones for the DEX aggregator set to occur this week, including a proposal to burn part of JUP's supply. Like HNT, JUP appears to face significant resistance around the $1.2 level. If it can break above this level, $1.4 is the next level to watch. If it gets rejected, look out below for $1. As for Sats, its 1000 Sats token appears to have pumped in response to the Bitcoin conference over the weekend. That's because Sats is basically a meme coin on Bitcoin. Depressing, I know. Anyway, 1000 Sats is facing its own fair share of resistance around the 0.0003 level. If it breaks above, it could rally as high as 0.0005, but if it gets rejected, it could fall as low as 0.0001. Apologies for all the zeros. Now, when it comes to PYTH Network, PYTH appears to have pumped in response to continued integrations with the next generation crypto oracle, as well as a developer event which began today in Japan. PYTH is currently struggling to get above a key resistance level of around 40 cents. A break to the upside would send it to 50 cents, whereas a rejection would cast it down to the 30-cent range. Note that these are all short-term targets over the next few days or week. And finally, we have Jasmycoin, whose Jasmy token appears to have pumped in response to the project's appearance at another crypto event being held in Japan today. This seems to be the only explanation, as the Jasmycoin X account has barely posted in recent months. For what it's worth, Jasmy is looking bullish as it's broken above the key resistance level of 3 cents. It could rally to 4 cents in short order before either being rejected or moving higher. That will depend on the broader market conditions. And if you want to know which cryptos are pumping and where you can trade them, then join the Coin Bureau Insider Telegram channel. The link to that will be down in the description. And that is all for today's Coin Bureau weekly crypto review. So if you enjoyed it, then you know what to do. Hit that like button, subscribe button, and bell icon too. Don't forget to check out our deals page, where we have massive trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 on some of the best crypto exchanges, only for the viewers of this channel. Also, if you want to pick up some snazzy crypto merch, then the Coin Bureau merch store has you covered. You can find the link to those resources and many others in the description below. Thank you all so much for watching, and we will see you in next week's episode.